In this video, I'm going to show you why 90% of prop firm trading advice is actually complete and utter BS. I'm going to show you the math, but don't worry, you don't actually have to understand the math, it's just about the conclusion. And then I'm going to show you what to do instead to pass a funded account challenge in the lowest risk rate possible. So this video does not target beginners who don't know what support and resistance levels are. Targeting beginners and people new to trading would be something that people like TTR do, which is not necessarily a bad thing. The reason I do this is that YouTube can suggest this video then to many people so that the reach is very large and they actually make more money, right? While this video's purpose is not necessarily just reach, but it is to show people what actually the lowest risk rate possible is. And to do this, we can't be absolute beginners. So this is not a beginner's guide. And so you should at least know what funded accounts are and roughly how they work. Ideally, you have done funded account challenges before. And of course, you need to be serious in order to watch and understand this video. But don't worry, it's not that complicated. And by the end of this video, you will know what the easiest way is to get funded without buying countless of accounts, which is a high risk rate. We want the low risk rate. So starting right into it, why is play it safe, just trade 0.5% account size per trade a bad advice? Typically, when you trade with personal money, you would say it's a very prudent way of trading, and of course you would be right. However, with funded accounts, what more and more people are realizing is that your account is not blown once you've lost 100k in demo trading, but instead once you've exceeded the maximum drawdown. So what actually is the limit is the max drawdown. This is the limitator, right? So I'm going to write max D, and actually if we do the math and assume a 5% daily loss limit, and assume that you take all your trades within a day, then this would mean that in order to blow your account, then this would mean that this is the equivalent of a 30% stop loss on a personal brokerage account. I know this may seem crazy to many of you, at 0.5% on a funded account with a 5% maximum drawdown is 30% on a stop loss personal brokerage account. But I can show you the math quickly, because in order to lose 5%, you need to lose 10 times in a row with 0.5%. And actually losing 10 times in a row and then losing your personal brokerage is the same as losing 30% per trade 10 times. Because then again, your account is blown as it is here, right? That's blown because you basically don't have any money anymore. And now you have to start over with a new account. So obviously in the evaluation phase, you don't actually buy the account, but you buy the maximum drawdown. But you don't have to understand the math, you just need to understand 0.5% on 5% maximum drawdown is actually huge. And the same will actually apply for 10%, even still, although of course less so. This is just to exemplify that this 0.5% number is absolutely not the proper way to manage your risk with a funded account. And when you trade this way, how are you not going to fail the challenge? People always talk about strategy and execution, but how important can it really be when you trade with 30% of a stop loss in your funded account? And I use psychology to explain why so many people fail funded accounts, but it actually makes a lot of sense that people fail them, considering the huge and disproportionate stop loss size that they trade with. I've created a table for you here. So if you risk 2% per trade, then you can fail 2 times and not a third time. With 0.5%, it's 10 times. Now this may seem to you that it is linear mathematics, because 10 times 0.5% is 5%, minus 100% is 95%. Not confusing you with the mathematics here, but it is actually not, it's just a coincidence. We're now moving to the important part, which is how to do actual proper risk management. And we can do this simple and free, and we don't actually have to pay for an expensive tool to do this, because we can do this in Notion. I've promised this to you here, and obviously I'm going to fulfill you this promise by showing you in Notion how to do it. If you've never used Notion before, don't worry about it. The learning curve of Notion is actually not as steep as people say, and I think you will actually grow familiar with it very fast. So we're going to look into Notion in a moment, but the Notion is not actually just for proper risk management, because we can derive this without Notion as well. But it's also for trading actually according to strategy. So this means not guessing trades, but most importantly, it means not gambling, not revenge trading, not overtrading. But of course, most of these are interrelated with one another. For example, gambling and guessing trades can be quite the same, or you can guess trades through revenge trading, or you can overtrade through it. So it's actually interrelated. Obviously, all of these are going to be a problem. Even overtrading by itself can be a problem because of the high commissions. Obviously, when you're not a profitable trader yet, the best thing that you can do is take few trades, so that by pure chance, your expected long-term value is roughly 0, and the only way that you lose money is actually through the commissions. So you want to take few trades and learn with few trades. So that's another thing that you're never going to hear a mentor say to you, that if you're not profitable, it's important you take few trades, but it entirely makes sense, doesn't it? So what I'm going to show you here is an example of what I mean by this. Let's say you have this chart. So this is obviously the moving average. This is the RSI. You probably will have guessed this even without the number because you've most likely accumulated some trading experience already. So nothing special about that. So let's say you're trading the market right here and you're trading according to support and resistance. Let's just say that, or according to whatever strategy, for example, short-term momentum or candlestick patterns, whatever it is. But now you also plot the RSI in. And you see that it worked here, and it worked here. It worked every time. But let's assume that this is not actually part of your strategy and you have not tested this. So this is actually risky. Now you come at this point and your trading strategy does not give you a signal, but you see that this signal would have worked in the past. Would you take the trade when the RSI has told you historically in the last few movements? Would you take the short trade is my questions. What I am arguing is not that it's not okay to take the short trade, but it is crucial to have tested your strategy because the problem challenge actually is the exam. You want to treat it like an exam and you don't want to experiment actually in it. You don't do this in a school exam as well, do you? So what may happen if you haven't tested it, so this is obviously the same chart, then you take the trade, you haven't tested it, and you lose 1R, which is obviously not something that you want to do. This is just to exemplify. Don't guess the trades, but instead just trade according to strategy. This is really crucial. This leads right to the meat of this video, which is the parse, a funded account helper, that's what I call it. And this solves the key problems that we've discussed here. It on the one hand ensures actual proper risk management for you, and also it makes sure that your trades are actually according to strategy with a journal feature. So looking at it in Notion again, first of all, you don't want to lose sight of all the funded accounts that you have. And this will actually organize it for you. So you see these two databases. If you add a new funded account, I will show you this shortly, then you will just click add a new page, such as this one. Type whatever name you want, so you can also call it the funded account Ironman. Choose the company, let's just say that's FTMO, and so on. This is going to be boring. And the part where it begins to be useful is then actually this part where you can insert the status. But obviously the use of it would be very limited if it was only for keeping sight of the funded accounts. Instead, it also calculates your proper risk per trade from your maximum drawdown. So you can choose to either insert your maximum daily drawdown or your maximum total drawdown right here. And based on your usual stop loss, it will calculate the proper amount that you should risk per trade. So that way you can actually avoid failing these program challenges because you risk the proper amount. However, the other key feature is obviously going to be the trading journal, which we can see right here. And this is to ensure that our trades are well executed. So before you are going to take a trade, you will click either new page, just as I've done right now, or you click new trade, and then you enter in whatever you're trading. So let's say the NQ when you're trading it. So let's say this is on Monday, and according to what strategy. In another version, this strategy tab will be more advanced, but let's say it's liquidity sweep. You can also insert your own, such as, I don't know, support and resistance plus candlestick. And the interesting part here is going to be the decision making. So this is even before you've taken the trade. You can say, what is your decision in this trade based off on? And you can say it's, for example, over-explained, which would be a bad thing, right? Because you're forming a weird narrative just to take a trade. You could also say it's preventable, or it's mechanical, meaning you don't have to think about it, or it's rational, so it makes sense, or it's according to strategy. You can also create your own options once again. And then after your trade is done, let's say this was a quite disciplined trade, also with the stop loss and so on, you can insert a chart image here. So then the interesting thing is, when we look at the gallery view, you will see your trades. Obviously, I haven't put a chart here, but you will see your other trades. So these are exemplary trades. This is an actual trade that I took, but in the Euro US dollar. And so then here you can reflect on the trade. So for example, the fair value gap was closed after mean reversion as of the latest high. And so that this way you can then eventually refine your own trading strategy. You can also make a new database with your trading strategies. I actually have a version for you where this is the case, where there's then also a strategy database, and you can relate your trades not just to the strategy that you enter here, but to the strategy in the strategy database. So I think this can be quite helpful when we look back onto here with avoiding all of these things. Basically the second part, because when you say the decision making was mechanical, then of course it was according to strategy, so you avoid all of these red things here, right? So I think many of you should probably give it a try. As I've said, the Notion page that I've just shown you is free. So you can actually click the link in the description and you can download it and use it right away for your own. And that way trade in the lowest risk rate possible, specifically avoiding to buy dozens of funded accounts without really passing or without getting payouts. However, to do this truly in the best way, you don't actually just want to trade with low risk, but you also want to avoid any premature funded account trading, because as we've established, you don't want to burn through your money buying funded accounts. So in my opinion, the best way to learn funded trading, and therefore, is to create a free trial demo account, specifically to emulate the funded trading, so that you then learn it and actually try it and demo, because that way you truly spend $0. And once you do spend money, then you actually make money, right? Because at this point, you will be a profitable trader once you've proven to yourself through demo funded account trading that you can actually do this, and then it never actually costs anything, because in that case, you would get paid specifically to trade. Of course, this is also possible in Notion, however, not in a downloadable template that I've just shown you, but I have made a Notion system where you can do this. Another important thing that I should say at this point is that you will probably have to do this with a company like FTMO. I know that many of you will trade futures instead of Forex, but I would actually advise you to not over fixate on trading certain markets and instead just trade Forex. I know that there's Forex futures as well. If you do want to trade futures and you live in the US, that's still possible. By the way, FTMO is available for US citizens. So this is one thing that I do actually recommend to you. And so you can sign up for demo trading on FTMO through the US link or through the EU link. And if you're already trading with system and you're confident in yourself, then of course you can also buy one of the funded account changes. Although I will always recommend first get very confident with the demo trading part, because in the end we do want to make this the lowest risk rate possible, such that we do make net income and we don't spend income, because that's actually what we want to do, make income, right? When we look at these trades again, by the way, this is another one. I've actually talked about these trades on this very YouTube channel, and this is the hourly chart in the Euro US dollar. So you could have easily done this trade with me. And as you can see, this is written by the software, which is CTrader, meaning that I couldn't have faked this. This is actually a real trade that I took and profited from. So this means that if you don't want to miss potentially trades in the future that I do, you should probably subscribe to this YouTube channel so that you actually don't miss these trades. Also, you can consider booking a call with me. The link is in the description. Subscribe to the channel. Write a comment with your thoughts. Bye.